All right, Drew, let's start off with your word of the day as we're seeing futures moving higher.
Yeah, so the word of the day is reset. Look, there's been a lot of talk about, sentiment getting really negative in the near term. But if we zoom out, sentiment was just at a really, really high starting point at the beginning of the year. We think that's just come down as of late. And then on the multiple side, markets were pricing in a lot of good news. So for the first time since October, the Lefkovich index, our sentiment gauge, is finally in neutral territory, and trailing multiples for the S&P fall within our fair value band. So put that together, that's a way better starting point as we work through this lingering bit of consumer and policy uncertainty.
So, Drew, one thing we've been hearing from some people, I want to see if you agree or disagree, is that right now we're kind of at a tradable bottom. A lot of people are seeing some upside for the markets in the near term. Dan Niles on Twitter yesterday, the latest voice to kind of say something similar. I'm going to read you part of the tweet, not the whole thing. He says, well, I believe this last week in March should be positive for the S&P, given greater than normal pension fund rebalancing. I believe Q1 earnings season will be rough as estimates get lower. Keep in mind, we're about a week and a half, 2 weeks away from earnings season right now. Do you agree with him that this is kind of a sweet spot in between what could be some kind of volatile days?
Look, we've kind of put a number out. 5,500 is really, where we think risk reward really gets balanced. So is it perfectly tradable? No, we still got to get some certainty on the tariffs here. Some consumer numbers are important. And then, on the revision side, yeah, revisions probably have to come down a touch still, but there's not that much room for upside, even if we hit those numbers right now. So, we're kind of in the kind of stand your ground type of place right now. We wouldn't really be chasing this bottom aggressively. But again, it is a lot healthier than, 61, 6,200 on the S&P.
All right, fair enough. Let's go to a stock that you're seeing some opportunity in right now. Drew, what's your pick for today and why?
So it's GoDaddy. Look, it's another stock from our thematic 30 recommended list. The site's known for basically like web hosting, or the stock's known for web hosting, but they're creating a lot of AI-enabled tools to help small and medium-sized businesses do this quicker. Our analysts after Q4 earnings said, fundamentally, what more could you want from this company? Strong beat, good projected growth. That really sets up nicely for 2025, but the stock's pulled back. So here, after the pullback, when we look at our work, market's pricing in $10, $12 in free cash flow, in 3 years. We think that can be, closer to $14. So this really fits that GARP story really nicely. And I think this is one you can add on a pullback.
All right, so you like this one on the pullback. Again, GoDaddy to websites and things like that. We had a similar company on last week, Wix, and they seem to be very bullish about their business as well. I want to ask you about another area of the market we're seeing a big pullback in, the Mag 7. We were showing the chart earlier, the Mag 7 ETF that tracks all of them together, down double digits year to date. That number we're going to show is going to change a bit. A lot of the stocks are higher in the pre-market right now. I'm looking at Apple up more than 1%, Amazon up almost 2%. Is this a buyable dip on the Mag 7 in your mind? I think that's a question a lot of people are trying to figure out. Is this a good entry point, or do you see more trouble ahead? We were just doing a story a second ago about the Ant Group basically finding ways to do AI with cheaper chips and also Chinese-made chips. So I want to ask you right now, is this a good spot?
For three of them, to answer your question directly here, honestly, we like Meta, we like Amazon, we like Google. I think the earnings expectations there, what's implicit in those stock prices, they can actually deliver and beat. A little bit less sure on Apple and Tesla, NVIDIA, Microsoft, a little bit more neutral to us. So look, they're not all going to trade cohesively like they did in the past few years. They end up being just 7 different stocks, not just one big magnificent 7 group.